Welcome to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where we make investing simple. I'm joined today by my friends, Noah Davidson, Corey Holliday. Gentlemen, welcome.
Yeah, excited to be
Great
here.
discussion on deck. As we get started, remember to like and subscribe, and also drop by yourinvestingclass.com. We've always got goodies there, free stuff. Change it once in a while. So if you haven't been there in a while, go see what's on there. With that, we've got an interesting discussion. The market's in an interesting place in two things we're gonna hit in this. So I don't know what our title of the podcast should be, but the two topics we're gonna hit on is, how do you position yourself in a market at all-time highs? How do you trade the market at the all-time highs? And then the second issue is we're going to talk about the amount of selling that some of the big boys have done to cash in. There's people that have made some pretty big moves to cash and sold some of the stock, especially when you have insiders doing that. That's always an interesting, you talk about the red flag or the red herring. So we'll speak about trading this market all-time highs amidst, that might be a good title, that's too long, trading the market all-time highs amidst insider selling.
Yeah. And there is a lot of insider selling.
So let's start with trading all-time highs, and then we'll get into some of the inside stuff. Investing for me is hard to do at all-time highs because you're shopping at the top of the market. Recently my wife and I purchased another property. Did we get the best deal on it? But I felt we had a good deal on it, and I felt there was upside. But at the same time, I was like, man, I'd rather pick up a bargain. Buffett and Munger, the late Charlie Munger, he says, don't, a good
company at a fair price.
A good company at a fair price is better than a fair company at a good price.
Yeah.
Or a wonderful company.
Yeah, a wonderful company. So it's really hard. This is a challenge right now because AI, I think, makes every company better. Every company, whether you're selling food or clothing or paper clips or even the most mundane stuff, you're going to have better efficiencies with AI, and it should drive profits higher. But it's hard to buy at the top of the market with all the other storm clouds we see. So I'll tell you what I've found myself doing. I prefer investing, the proportion of investing I do as opposed to the portion of trading I do. It's different in my mind. So as an investor, I want to find a company, want to hang on to it. It's a goose that lays the golden egg. Want to compound that, keep those, add shares. I want more shares, not less. I don't like the idea of selling. I think selling to me is harder than buying.
Yeah.
Do you think selling is harder than buying?
Oh, yeah, definitely. I mean, buying, you can wait for a great pitch to swing at. Selling, you're just swinging at whatever pitch is presented to you. And I guess you could be really patient with that. Like Warren Buffett does some selling, but he does it based off of certain metrics. Most people do their selling based on emotional things. Yeah. And that's the problem they get into.
You don't win the monopoly board by selling.
Exactly.
You land on it, you buy it. And so
you try to keep it, yeah.
Land on it, buy it, try to keep it, and collect cash flow, and people land on it. That's the system.
Yeah, and if I'm going to sell something, what am I going to do with that capital? I'm going to try to find something else to buy. And a lot of times, the grass is always greener on the other side, right? We may be dumping a good investment thinking that something's better, and that's not always the bigger, better deal. Sometimes it's, so you got to be very, very slow to exit your investments. Very slow. I mean, I want to give them every benefit of the doubt as much as I can.
Yeah.
And only if really it comes down to fundamentals. If I am convinced that fundamentally this has just gone too far, it's way, way overvalued, there's just no reasonable way for me to make a good return going forward, okay. But it gets into those realms where I want to buy things and own them. And that's one of the benefits of what we do, which is we can cash flow the investment.
Right.
So over time, I can pay that investment off time and time again through dividends that it's providing me, and also covered calls and other streams of income that I can generate, and I also know how to hedge and protect. So if there's a time where the stock is vulnerable, I can protect some of that downside through protective puts and things. So I always look at my investments as I really don't want to sell any of them. My hold period is as long as possible. Like, I want to pass it on to my kids, and I want them to pass it on to our grandkids, But
it makes it hard to buy. So, Noah, what I've been doing, first of all, the amount of cash I have is the proportion of cash has gone up. I've sold some of the lower performers. And I don't mean by stock price, I mean by business.
Yeah.
I've looked at the businesses and said, where are my low performers? And I've been trading, like, for example, if you do an iron condor, that's really a trade on cash. You're really not genuine and honest in wanting to acquire an asset. I guess you could say, well, if it goes down to towards your put strike, maybe you're going to pick something up. But you wouldn't buy all the protection if you genuinely wanted to own it at that lower strike.
Yeah.
The other thing is I've done a little. My iron condors have been on the S&P, not a specific stock. So really, what I've done recently, and I haven't done this in a while, is I've been taking positions that leverage my cash rather than buying stock. At the end of, if you can trade a credit spread, you're really wanting cash, and it's a cash play. And at the end of the period, what do you wind up with? More cash instead of more stock, instead of more asset.
Yeah.
That's not what I really like. I like the cash flow, and I like when I win. But those are riskier trades that you got to babysit a little more. And but I've been doing some of that stuff simply because I want my cash working for me. I don't just want to throw it in bonds. I want a higher return, so a lot more risk. I'm not putting a lot at risk. But I just don't like buying stocks at the top. What do you think, Noah?
Agreed. As I've looked around shopping for investments, there's not a lot out there that I found super appealing.
Yeah.
And as I look at the valuations, a lot of these things that are running hot are really quite a bit overvalued. They're again, the market being a forward-looking instrument is always, doing a high forward PE type trading. And again, we're operating at elevated prices. At the same time, I see insiders selling. I see, a lot of, I don't know if you would call it, what is it? The irrational exuberance, so to speak. Yeah. I look at the Shiller PE or the CAPE ratio, and it's at 38.25 yesterday when I checked it. So that's as high. That's the second highest it's ever been.
That's next to the .com.
Next to the .com, which doesn't mean it can't.
Which is what, 41?
Yeah, which doesn't mean it can't go higher.
Yeah.
But, and again, we're in the fourth quarter. Things are pretty bullish in the fourth quarter. So I do see upside. Like, I've got long positions on like Costco. And some of those types.
You want Santa Claus?
Yeah, Santa Claus rally. It's kind of a seasonal thing, but as far as like I've got as much cash on the sidelines as I have invested. What I've been doing in our little mentor club portfolio is we've got our core holdings that we've been holding. We write our covered calls on it, and it's kind of slow and steady wins race. But we have about half of the portfolio invested, and the other half sitting in. I got a quarter of it sitting in just cash, and then I got a quarter of it for speculative trades, and I've increased speculation with closed risk graphs, doing debit spreads, where if you win big. If you lose, you can only lose so much, and it's all been bullish. We're very, very bullish on things, but it's got fixed downside risk so that if these all-time highs lead to a correction, which I don't really see a correction coming till probably January. My ability to predict the future is terrible, but
usually if you're having a really strong year, you finish
strong. Right? Yeah. And there's momentum right now in the market.
Do people don't want to sell because they don't want a tax
bill,
right? So they'll wait till next year,
and that gets the January effect. The January effect is usually the best performers perform really well into year end because nobody wants to sell and have the tax bill. But as soon as January hits, whatever they wanted to sell, they'll go ahead and sell it because now they've delayed the tax on that an extra year. So January 1 is kind of key in that once you hit 2025, now all of a sudden there is a desire to take some off. Now they might not be unloading everything, but they might want to sell 10% of their holdings. And if you're a huge institution, that's millions and millions, maybe billions of dollars worth of XYZ, and that adds up. So kind of an interesting seasonality.
Yeah. Well, and the other thing I've been doing is I've got protective puts on stocks I own that I've either started out as a caller or sold calls to pay for.
Out of the money on those?
Out of the money, but I've paid for them by selling calls.
So you're collaring in a way?
Yeah, like I got like a big position on Microsoft, for example, where I collared it ahead of earnings. The stock price dropped. I closed the call at full profit, which paid for, and the put's good till February. So I'm covered, but I don't have any like cost on that. And if stock goes up, great. It's an opportunity cost at best.
So that's a really nice. I like the collar trade right now because you kind of pick a range if you want to put an asset. It limits your upside, but you can collar here or you can collar here. And
right.
If you're willing to take a little downside risk, you can preserve a little upside reward, but nothing extreme.
Yeah.
I kind of like the collar right now.
Well, and even if it's just a protective put, it's opportunity cost at most. Like if I buy a $500 protective put and the stock rises $5, I didn't make any money, but I felt good. I could sleep at night. I don't have to worry about the market doing something crazy. And it's, gives me that measure of protection. And so, it doesn't really affect your account balance. And then if the market outperforms, woohoo. It's certainly covered. So I think, I'm a nervous Nelly at market highs just because I've had my backside handed to me before. And I've felt that that market correction hit. So I'm constantly watching for it. And right now I think the momentum's strong and I think the fourth quarter is going to carry us through. But, we live in a crazy world.
Yeah. I'm with Corey in that the lack of fear scares me.
Yeah.
Well, okay, so, nobody likes to talk about politics, but the market had a really bullish reaction to certainty outcome. Like the market, I don't think it cares either way, but it likes certainty. Right?
Yeah, so let's digress a little bit on that because I thought about doing a whole podcast on this.
Yeah.
Corey and I had a great conversation for our, preparing for our Rich Dad newsletter. So the election, it is so interesting that if you have an unknown like 9/11, just right in the side of your head, never saw it coming. I mean, all hell broke loose. I mean, that's rough on the market. But if I announce there'll be an unknown to where we know there'll be an unknown that becomes known.
It's like an earnings announcement, basically.
It is.
Yep.
So a good friend of mine, and it was so funny because Corey and I, we were all in parallel. We're all in parallel universes here, thinking the same thing. So on probably the 3rd or 4th of November or so, I started getting calls from, you guys get the same thing.
Oh,
hey,
yeah.
What do you think?
What do you do? What do you think?
Yep.
And this guy is saying, hey, I think I want to buy calls on the VIX. And I said, I'm actually going to sell my calls on the VIX. I go, because what happens is, I don't know if neurosis is the right word for it, but as soon as you say, here's going to be an unknown that becomes a known, people go nuts. And they think of every good thing, like the whole spectrum, from the best thing, the worst thing could happen. And there's a bunch of energy and speculation. And it's almost like they forecast the worst thing. And so all the energy is before the event. Mm-hmm. And so it's the unknowingness of the event that's going to be known that causes all the panic. I go, that's what's going to elevate your VIX.
Right.
Yep.
And I said, actually, you want to be the opposite of this. You don't want to be buying VIX in the 20s. You want to be buying VIX 12, 14, 15. You don't want to be buying a VIX call in the 20s or 30s. And so it was so weird how opposite we were thinking. It's like an earnings announcement. You're going to have a volatility crush after the unknown becomes known. And it isn't who wins.
It's certainty.
It's just knowing what the rules are. Okay, are we gonna have tax on unrealized capital gains, or are we gonna cut taxes and threaten the world with tariffs to stuff like?
And it's funny because we obviously spend too much time together. Because Andy called me, he had just had that discussion, and I was on our coaching forum, and I was teaching them. This was the Monday before the elections, and teaching them this whole concept of this is a known unknown. It's known. We know the date. We know the time. We know all of these things. And so the market's already preparing for worst case scenarios. It's already preparing for what if we don't get the results for a few days? What if that's all being priced in? And so I was taking them through this volatility crush idea. And, I get done with the coaching for him, call Andy back. And he's like, hey, just wanted to talk to you about the elections, and got, so-and-so calling me. And I told him, I think there's going to be a volatility crush, so on and so forth. And I said, yeah, I just talked about that same thing. Why don't you send him the recording of the coaching call, call. So it's funny because when you look at these events, the fear, like you talked about, they're basically pricing in essentially worst case scenarios already. So if the worst case scenario does happen, well, then it's just even, and if nothing bad happens, then there's this huge drop in volatility. Yeah. And that's what we saw. The VIX went from 23, now it's at 14, it's like a 40% drop or so. I mean, that's a huge drop in volatility, and that's how those options just collapse in value, which is great for us as option sellers.
What I thought was funny is the Democrats, everything's rhetorical right now. Republicans and Democrats are rhetorical. One of the frustrations with both candidates that I always have is you're just going to say whatever you think will be the best outcome.
Yeah.
Googling the truth. Yeah. That's why
called politics.
Googling the truth just doesn't happen, right?
Yeah.
You just say whatever you think. Well, what's interesting is this guy's, we were talking about a January 6th type of scenario. And if you really want to know whether people believed that a bunch of guys with bear spray could take over our capital permanently, just look at that day of the market on January 6th. If you didn't have a day and you just said, pick the January 6th candle out of, say, 2 months of candles, you couldn't do it.
Yeah.
It was ho-hum. They're like, these people broke the law, slap them around, do it, prosecute them, whatever. But we weren't going to have our country taken over by a bunch of guys with bear spray. Anyway, the point is all the energy. I says, even if you had something like that, the market doesn't care that much. What the market cares about is whether there's earnings.
Yeah.
What the market cares about whether there's profit.
Yeah.
And so whatever set of rules you want to set out for the next 4 years, this is what I do know. People want food, clothing, shelter, energy, technology, and medicine. And they want healthcare. They want those things. They're going to spend money on those things. Let's own those things so we can sell them. So back to, I've actually bought calls, debit spreads on the VIX after it fell, because 14 VIX is tempting. So I think my spread's probably 18, 23, something like that.
Yeah.
I haven't
yet, but I don't.
You're waiting for it to get to 12.
Well, but I don't dislike the idea. I mean, that's the idea is you want to be in before the energy, not when everybody's running around like a chicken with their head cut off. So you want to
when it's cheap.
Exactly. There's an old saying, buy when you can, not when you have to, type of thing. And so that's where people felt like they had to get some protection. They were tuning in to choose your source, Fox or CNN, and they were saying, okay, there's going to be this or there's going to be that. How do we get protected? And at that point, the options are so expensive. So the better trade is to be understanding and educated on, well, you get the volatility increase in the weeks leading up to that major event, and then you want to sell it before that event so that you don't have the volatility collapse happen to you.
Yeah.
And that was the way we played it. If you look at scenarios where volatility is going to surge and keep going, then those are the unknown unknowns. So those are things like you mentioned, 9/11, anything, terrorist activities, natural disasters. They could be good things too. Breakthrough drugs, whatever. If there's something that truly was unscheduled and comes into the market, now the market has to adjust to that.
On the fly.
On the fly. And then that's where it's not priced in at all. And that can take multiple weeks. for the market. I mean, maybe months. If it's a COVID, that's an unknown. So it can take a long time for the market to reprice in a major risk or, some triumph that was not even accounted for and not planned for at all.
So I don't tweet very often. We've got a few followers and we tweet, and a few people pay attention. But on November 4th, I did tweet this, and I said, the thing I'm more worried about is not the election. It's the last 20 years of fiscal irresponsibility before. I don't see the risk of being snapped in an election. I'm just overall worried. So why would I buy insurance when it's at its highest? Let it drop, and then I'm going to buy my insurance, because I'm more worried about the fiscal irresponsibility and the money paid. And you have a quadrillion, maybe 2 quadrillion in derivatives that are all leveraged upon leverage with each other. There's a huge domino effect to this. That's why when we had the Japanese carry trade, the market showed its hand then, I think. Yeah. When the Japanese carry trade started to show trouble, the question is how integrated is this a domino that can cause another domino that can cause another domino to fall? Silicon Valley Bank was a domino that fell, and the Fed came in and over the weekend and granted themselves new powers. Yeah. And said, we're going to stop those, because that could have been.
Well, but the nice thing about that one was at least it was just U.S. government debt. It wasn't something. Yeah. They have some control over their own, because it was U.S. government bonds that got Silicon Valley into trouble.
Do something about it.
That's why it wasn't contagion. If it had been corporate bonds on.
But that's why they acted, to stop the contagion.
Oh yeah. I mean, and there were troubles at multiple banks, right? And so they stepped in and did some changing to the accounting and the way that companies have to hold reserves and so on.
These VIX spikes kind of show the hand that they're all the same as we are. It's like, okay, it's running. We want to enjoy this run. We're going to keep a positive delta. I'm heavily bullish, but I'm ready to head to the exits. Yeah. Not necessarily in terms of I would sell my stocks, but in terms of hedging and putting on some hedging strategies, I'd be ready to go.
I'm ready to spend thousands and thousands of dollars on insurance when the time comes.
When it's ready.
And it'll protect hundreds of thousands, of dollars.
Of all that stuff. So anyway, the hard thing is when you're at the market all-time highs, and you mentioned the CAPE or the Schiller. Yeah. How do you pay $38 for a dollar? How do you pay $38 to get a dollar?
I mean, best you hold your nose and buy.
I mean, they got to believe in growth. You have to believe in continued growth. Oh yeah. And maybe we missed the boat because the misery of it is AI. So when we come back, we're going to talk about that. We're going to talk about AI. We'll take a little break, and then when we come back, we'll say, can AI keep supporting this? We'll talk more about some of the selling that went on, who sold, some pretty big names.
Some pretty big AI names.
Yeah, when we come, a lot of tech when we come back.
I am learning a lot, and it's easy to understand. Andy is fun. Andy's very enthusiastic to watch. He makes it a lot simpler to understand. I'm really benefiting from everything that he's teaching. I think the most valuable thing I've learned from Andy so far is the fact that it's not scary and it's easy to do.
Anybody can do this with the right amount of education, effort, and willingness to learn. You can learn it too. Andy, thanks for making this simple. Thanks for making this fun. Thanks for pouring your heart into this. Thank you very much.
Welcome back to the Cashflow Academy podcast. This is where we make investing simple. Remember to go to yourinvestingclass.com and also subscribe if you enjoy the content on the channel. Buffett sells the best trade. This is so weird. Buffett's best investment ever, Apple. Bigger than Coke, bigger than Moody's, bigger than the bank stocks.
Maybe not the best on percentage terms, but definitely in dollar terms.
In terms of dollars made.
Yep.
And he didn't buy Apple early. You know, he bought Apple.
Yeah, I mean it was little over a decade ago.
Yeah, probably 10 years ago. So here the guy's 80s. He makes the best trade of his life in his 80s. then he sells it all. And that's not like him. He looks at a business. He buys businesses with moats. He buys businesses that are untouchable. He buys a business that you can't storm with capital. When's the best holding time, Buffett? Forever, right?
Forever, yeah.
So he's selling, and maybe
selling most of it. Yeah.
It became half his money, though.
Yeah.
It just became half his money. He goes, we don't believe in diversification, and yet, so here's the theories. Theory number one, and he alluded to this perhaps. Maybe you can refresh my memory if you guys read the annual. And can remember the annual. But so you have, let's say the Democrats would have had the mandate. Let's say that the Democrats take all three branches. You're probably going to have an unrealized capital gains tax on the $100 million club.
Yeah.
That's really a weird butterfly effect, because who's going to buy all that stock? Yeah. That really hurts the little guy's 401k, I think.
Yeah.
If you have a behemoth liquidating to being forced, how are you going to pay the taxes if you don't liquidate? You can just pull it out of your pocket?
I'll just say it was a bad idea.
Yeah. You're just going to come out and say
it's a bad idea. I mean, it sounded good for a campaign.
It sounds,
but in reality,
it
hurts the 401. People who are depending.
They don't
on
see how it's going to hurt. It ripples, and Reagan had trickle down Reaganomics, or whatever we call it. Well, when bad things happen, it trickles. They pass all the poop goes downhill. It just does.
Gravity.
Yeah. So now Buffett, he's sitting on, I want to say, 320 billion.
Yeah.
320 billion.
One third of their market cap.
A third of their money's in cash. That's crazy, because he hates cash. And if you believe that inflation is a fact, I guess you can throw it in the bond market. I mean, these are cash equivalents, not cash, I guess, is how they would
It's
count
essentially cash, yeah.
It's essentially cash equivalent. So I guess you're trying to keep up with inflation with some, marketable security, a bond. But I'll tell you, it looks like he's getting ready to pounce. He looks like he's timing the market to me.
Yeah. Oh, he is. And when you think about how much he sold and how much he has in cash, he's timing the market in that he's saying, I don't have anywhere else to put this money that I feel safe and confident about.
But do you think if I'm Buffett, I'm not going to be scared of ghosts, and I'm going to have time. If, let's say, the Democrats would have won, okay, now you can sell.
Yeah.
Because it's going to take time so for him to claim it was a tax issue.
Well, I think that's only.
Do you buy that?
It's a piece. It's one little element of.
Yeah.
They need to be prepared for that possibility, but it's mainly and solely primarily fundamentals.
Okay.
And Buffett can't use, Berkshire's so big, they can't use options for protection and things like that.
It's not a big enough market for him.
Oh, no. I mean, imagine how many contracts, even though the options market can suck up all the volume we want.
The market makers couldn't.
They can't handle it because Buffett owned 300 whatever billion dollars worth of Apple. If he was trying to buy protective puts, he'd be buying so many contracts. He just can't do it. It would just drive the prices through the roof. And
he even alluded to that in his letter. He said, look, we're not going to be a 20% of your company forever. It's just, we're so big, it's just hard to do.
Yeah. And he used to do a lot of options back in the day.
Now he does warrants.
Well, and now he does options with insurance companies. This is something where massive insurance companies, they'll sell annuities and they'll sell these products where it'll guarantee people against downside, and it'll say, okay, well, annuities are kind of a scam, but anyway, they'll sell someone that, hey, you'll never get worse than a 4% return, but you'll never get better than a 10 or something. And so they get all the excess on the top.
They get float, basically.
They get all the profit that's above X percent. And you would be surprised how many times the stock market it averages 10% return, but its returns are all over the place. It'll be up 30 one year. It'll be down 20. It'll be, usually the downside's not so big. It'll be like down 5. But those big high ones, the insurance company that sells the annuity takes all that upside. But they need that protection underneath, and they're selling billions of dollars of these, so they'll enter into contracts with Buffett, and he'll basically sell the put to them worth billions and billions of dollars. So he's entering into an option contract, but he's doing it with somebody that's so big that he can actually do it.
It's more like a warrant because it's not marketable.
Yeah.
And some warrants are marketable. I mean, you can sell a warrant per se, but some are not marketable, and he has to do handshake deals. Like with the banks, we weren't going to get those opportunities.
Yeah.
So yeah, it's interesting. So okay, so Buffett, Bezos. In fact, you had a list on your phone.
I asked ChatGPT.
Well, I don't trust that.
Well, neither do I, but it gave me a decent list to work with.
You know,
Yeah,
we'll
probably
see if
pretty
we're right.
accurate, actually, from what it said.
Well, I basically just asked it over the last 6 months what top insiders,
who's
what Wall
selling?
Street
The
insiders are selling.
biggest sellers, yeah.
Number 1, Jeff Bezos. He sold $10.3 billion.
That's Amazon.
That's
Of
more than
Amazon.
just that's more than selling a few stock to pay for your daughter's wedding or something.
Yeah.
Man.
Well, it
That's a
depends on
move.
what kind of wedding you want to have. But yeah. Michael Dell, number 2, sold $5.6 billion.
That's a stock I own, but I was aware of that.
Mark Zuckerberg selling peanuts, a mere $2.1 billion.
Yeah.
Mark.
And Peter Thiel sold $1.8 billion.
Is that of Palantir? Does it say?
Palantir, yeah.
Yeah.
And Palantir's on a tear.
Oh, yeah, it's
It's
been
on a tear.
Running through the roof.
Jensen Huang of NVIDIA sold $1.5 billion.
Yeah.
Elon Musk sold $1.2
Where are they putting this?
billion.
Where, first of all, there's two things to think about this. Who's buying this stuff? We are. 401ks are. And that's another thing I hate about 401ks is think of let's say you got 30 million Americans. 30 million, like that's a lot.
Yeah.
30 million Americans get a paycheck and slice off a percentage of that to Wall Street. Okay, they're going to buy bonds and they're going to buy equities, mostly equities, because most of them are younger. I'd say the preponderance is in equities.
Yep.
They're not buying that because the earnings were great. They're not buying that because there was a report that said
They're buying that because it's the second Friday of the month or
they're-
whatever it is.
They're buying it because they're on schedule.
Yeah.
Yeah.
They're buying stocks because they're on schedule, just with a belief in the American business overall. But man, that feeds a lot of demand. That feeds. It creates a lot of demand.
Yeah.
So are these billionaires selling to the 401k people? I think they are, by
Yeah.
and large.
I mean,
That's who's buying it.
Yeah, it's basically
And
my
so-
guess is that they're taking that money out of their stocks and they're putting it into bonds. So it's
Probably.
coming out of the stock market, essentially somebody
But
has to
they're
be there to
selling
buy
it.
it, and the
They're
401k.
They're selling it to the 401k people, and the
Yeah.
401k people are paying $38 for $1 earnings now.
Yeah.
They're paying $38. That's why I don't know if I like investing right now as much as I like trading.
Yeah.
I think I like to, and I can't believe I'm saying this, but right now I kind of like trading. I'm still going to get my dividends. I'm not selling a lot of stock. I'm getting my dividends. I'm writing my calls. It's just that I don't like the idea of buying more right now like the 401k
Yeah.
people are.
Certainly not loading
I
up
like
in any.
keeping what I got, collecting what I have, but I don't see anything I want to load up on.
Yeah, exactly. And that's one of the things is, as an investor, you're looking at value. Much like a trader looks at a trade, you're weighing the risk and the reward and the probability. And right now I'm going at 38 times earnings. What's my reward from here? So can it stretch to 39, 40? Can it go a little higher? Sure. But how bad can it get? I mean, if it normalizes and you go back to a 20 some odd PE, that's a lot of downside, for not very much, could squeeze out a little bit extra. And the probability of us continuing to go higher at these lofty levels, I mean, you weigh the risk reward probability and it doesn't scream load the boat on equities right now. It says you should be selling like all these big tech behemoths and Warren Buffett.
Everyone on that list is in the NASDAQ.
Yeah.
Yeah.
Okay, so this is freaking
And the
dilemma.
NASDAQ's right there near the all-time high.
And here's
Yeah.
the dang dilemma and misery of it all is, AI, we don't have general AI, but we have better algorithms than we've ever had. ChatGPT is, the more I use it, the more I see the chinks and how far it has to go, right? But we have cool stuff that helps
Yeah.
us evaluate things in a cool way. We have things that can help produce. White-collar people got to be mortified at, it's hard to build a robot to, take away some of the work with their hands. But to just replace a mind that's faster, better, more efficient, you got to own this. So on the one hand, I see all this insider selling. I see really rough fiscal stuff. Trump's going to want to print money. There's no camp now that doesn't want to print. You notice that?
Well, yeah,
Trump. Did you see Powell's response to this? Is the press question?
Yeah.
If Trump asked you to step down, will you? His response? No.
Yeah. Well, it's not his.
Yeah.
Like Trump can't fire. That's one of the challenges with Trump is he's a CEO type of guy. Like he's not a reach across the aisle, shake a hand. He's a leverage guy. He's a battler. He's a warrior. He's a take no prisoners. The art of the deal is like, you're gonna make him put your hand behind your back and make you do stuff, right?
Yeah.
Like I thought he did a good job with NATO that way, but he doesn't get to fire Jerome Powell.
Yeah.
I mean, I guess.
And what's interesting about that is
oversight. The mandate will be interesting. Bill Clinton had a mandate and screwed it up. Remember?
Yeah.
Next thing you know, Newt Gingrich was the new sheriff in town.
Yeah.
Remember that?
Yeah.
Got a 100-day contract with America, whatever. Bill went and took his mandate way too far, and the American people were like, "Whoa, whoa, whoa, Bill!" And so Newt became the new guy.
Yeah.
That could happen.
Yeah. And Trump put Powell in as the Fed chair. So it's kind of interesting how they've kind of gone to battle against each other.
Trump wants to print money.
But yeah, and that's what the market's saying post-election. If you look at the market's reaction, is that they think a lot of the tariff talk was just tough talk. That there may be some more tariffs towards China or some of those that maybe didn't play as fair as they should in trade war. But, I mean, massive tariffs coming to Europe and so on. First of all, that would be very, very bad for the global economy and stock market. But I think that was talking tough. What they think is, what they really think is that Trump's going to follow the same script as his prior 4-year presidency, which is no president ever talked about the stock market more often than Trump. He's pro-growth. He's going to try to drive things through the roof. He wants strong economic activity and, dollar be damned and all of those things. And so, when you talk about the potential for us to inflate further, I used to say the big wild card to all of this for this past year that we've been talking about how valuations are such highs, the wild card is AI. Well, now you have a second wild card, which is Trump is potentially going to really try to push the gas on growth
he's going to
even
really
further.
He's going to help. There's no question he'll help corporations with taxes.
Yeah.
Corporations are going to pay less tax for the next 4 years, and they're going to hit the ground running. He's far more prepared. I honestly think he was surprised he won last time.
Oh, 100%.
The only time I've ever seen that dude somber in my life is the night he won. When he took when he beat Hillary, when he took that mic, I mean, I was like, this dude's like, I got to do this job now.
I think I made a mistake.
Yeah, I got to do this job now. And then he, but he's so much more prepared.
Yeah.
He kind of knows the ropes now. He's got experience under his belt, and he'll do better with his transition anyway.
Yeah.
And he's kind of got the people around him that he's very much into loyalty and all this. So yeah, the taxes are going down on corporations, which will up corporate profits and make Bernie Sanders nuts.
Yeah.
But that growth creates jobs. So you have the same old thing, inflation and jobs.
Yeah.
How are you going to deal with inflation?
I think
tough.
we could probably update the old saying from death and taxes to death, taxes, and inflation.
Yeah.
Because it's a constant. I think it's become just
is.
the way of the economies in general. Because otherwise, what do you have? Degrowth. I mean, you have,
that's modern monetary theory. You just inflate.
Which means you have to trade your dollars for assets. You have to trade your dollars for something of value.
It is. It's the worst trade of all is just to be sitting in dollars endlessly. You just don't want to be in cash.
But it's weird. It doesn't matter really who wins. It matters whether you're a producer or consumer.
Yeah.
One of the things that my wife and I have been talking about a lot is this concept. Her name escapes me, but in the 50s, there was a psychologist, and she coined this term, the locus of control, and it came up on a podcast I was doing the other day. This guy said locus of control, where an entrepreneur and investor wake up in the morning, whether right or wrong. I mean, this is a fascinating discussion for another podcast maybe. For right or for wrong, people at this table and most of the people listening believe that we have freedom and agency, and we can wake up in the morning, I can learn something, I can take a class, I can invest, I can start a business, I can lift weights, I can control my outcome.
Your destiny. Yeah.
The other type of person has a locus of control externally, and that's what politicians would prefer you have, because if I get elected, every single matchup, I had ChatGPT list every single matchup in American history from Washington forward. I remember this one fight between two politicians, and it's always an existential threat. If we elect this dude, our nation.
If we elect
doomed.
Thomas Jefferson,
it was Thomas Jefferson.
Yeah.
If this guy we'll lose the Union, it was Abraham Lincoln.
Yeah.
The very guys that are on the, guys on Mount Rushmore were going to be an existential threat. So when your locus of control, your perception of it, and I don't know which is true. Part of me thinks you have no control over anything. But
luckily this is all just a simulation.
Yeah, it's just
a simulation. Whoever's writing this season's finale.
By the way, you guys are so realistic. By the way, I mean, the fact I see you guys you seem like real people.
But every once in a while, you'll see a little
job.
glitch. You'll see a little glitch.
Cat walks by twice.
Yeah.
A little glitch in the matrix.
little deja vu, you know. But really. It's an interesting time to have a locus of control internally. What am I going to do to deal with the external stuff that happens?
Well, I mean, ultimately, that's how you try to train an athlete is control what you can control. The things that are outside of your control, they don't help you.
That's AA. That's the serenity.
Well, but it's the same thing. I love watching an athlete when you can tell that their training, their psychological, training is coming out, and they're talking exactly about those things. We only control the things that we can control.
Yep.
I can't worry about what the refs are doing. All I can control is, and then, I take, that negative thought and I cast it out, and it's.
And then the ref calls a holding penalty when they're in the class, the 1 yard line,
on fourth
down. And the AD rushes the field and loses his mind. Right? Locus of control. Locus of control, right?
But it's such a better mindset, and for anyone listening, I mean, the investor, the trader, control what you can control. There are things that are outside of your control, and you can analyze those, right? But we really have no control over what this corporation's doing with their capital. We have no control over the decisions that they're making. But what we can control is whether we invest with them or not. And if a corporation shows you that they're not worthy of your dollars, if there's something that's kind of like, I tell the story of Chesapeake Energy, which went bankrupt and then reemerged. But Chesapeake Energy, their CEO was buying their own stock, and he went wild and bought like $70 million worth. And then their stock price collapsed in the global financial crisis. And Chesapeake Energy gave him a bonus that basically reimbursed him for those losses, which is obviously not okay, right?
Yeah.
And so a few years later, the company dwindled and fell into disrepair. And I think, call it karma, call it whatever you want. If the shareholders see that the CEO and the CFO, if it's a good old boys club or whatever, and they're only taking care of each other, if they show you their true colors, believe them, and don't invest in them. And that's kind of a good lesson of what we can control is most important to us. We can't really control the government. We can cast a vote, but at the end of the day, who's president matters a lot less to me than what I can control, which is what I'm doing with my money, what I'm doing. And of course, I'll try to influence those in my circle of, trust here. But other than that, I can only control my financial education, what I'm doing with my finances. And if the U.S. is doing dumb things or international, corporations and businesses are doing dumb things, well, we can control how we protect and how we do things to take advantage of those downside.
Bottom line, I'm doing more trading. I'm not selling the core. I'm not looking to get into equities at these prices, but I do want to leverage my cash and make money off my cash right now.
I have no open-ended risk graphs to the downside, like not one.
Everything
has a flat bottom, either a protective put or, like I said, I've been doing a lot of debit spreads that have fixed risk.
Yeah, that's a good way to go, Noah. You're going to put a drag on some of that growth with those premiums, but my hell, that's what you do. Right. I mean, what's more likely right now for people's houses to burn down? No one's stopped paying their insurance payment on their homeowner's insurance, right? You have a baseline, you have a line on your homeowner's insurance, just like you've talked about. Yep. What's more likely in the next 4 years? For your house to burn down, or for
your stock portfolio to burn down?
Yeah, it's just a little opportunity cost, and I still think there's upside potential in the near term. I have no idea what the future is going to bring. I mean, nobody does. All I can do is control.
Control what you
but I like the collar that comes through a control. The control that comes through a collar. I really like the wide collar right now.
Yeah,
the wide collar, kind of a nice place. Or
one of my favorites is a partial collar. I mean, if you have more, you've got 200 shares, 300 shares, 500 shares, whatever. Sell
shares.
two, and buy more protection and leave some open-ended upside.
And one last note is callers are interesting because calls have been going for more money than the puts, which is rare.
Why not sell it?
You're getting a credit where usually there's a small debit, because typically we call it tail risk. People are more worried about a crash to the downside. Yeah. They don't worry about a crash to the upside. Stocks don't usually crash upward, but there's
they melt upward.
Yeah, there's so much optimism.
We're having a melt up.
We're having a melt up.
But we're having so much euphoria that people will pay more for the calls, and they just don't want the puts. So those are cheap, and you're actually getting a credit for some callers.
And I'll tell you, I had the guy that first showed me the collar trade 1,000 years ago, the first time, he actually showed it as an income trade, and that was very
that's exactly how it was taught to me the first time.
Very deceptive on his part, though, because it's a neutral trade. It's a defensive trade. It's not a cash flow trade. But some of these are, I helped one of my friends put one on. He had a big NVIDIA position. And I said, well, let's collar this up. And it's your decision. So I showed him what it looked like. It was actually a small credit.
Yeah.
He had his pay, just like you're saying.
Yep.
So great discussion. So grateful to you guys. So grateful for financial education. So grateful that is something I can control. People who are ignorant, I think, feel more of an external locus of control because they don't know what to do.
Yeah.
People who are educated feel they have more of an internal locus of control. So that's kind of a cool thing, just say locus of control. Okay, thanks guys. Thank you so much. You've been watching, listening to the Cashflow Academy podcast. Hopefully our discussion wasn't only interesting, hopefully it was food for thought and gave you things to think about how you want to invest in this market, trade this market, protect yourself in this market. Very interesting times. Certainly times have changed. Like, subscribe, go to yourinvestingclass.com. We'll see you next time.